Bonnie, let's carry on that conversation and talk a bit about what's happening with the dollar. Time now for Futures in Focus. Joining us from the CME, Larry Shover, the CIO at Efficient Advisors. Larry, the dollar's been going down, down, down. How dovish does the FOMC have to be to keep that going?
I think it's got to be like a dovish double down. I mean, given the lessons they learned from December and January, it's going to have to be incredibly dovish, and I don't really see that happening. I mean, the first thing they have to do is put the brakes on the brakes with regards to the balance sheet. But, you know, when you look at effective funds rates at 2.4 and a 3-year yield dipping below that, there's some tension. So it's going to have to be a doozy for the dollar to continue to drop.
Okay, let's say it's not. Kind of how much of a coiled spring is the dollar to the upside?
Yeah, I mean, that's my feeling all along. I mean, I think how much Fed depricing is left. You have to think of that. Also, the U.S. dollar remains the highest yielding currency in G10. And the biggest thing is all relative. I mean, we saw the trifecta of Australia, the ECB, and Japan, you know, easing policy there. So it's relative. I mean, it's going to continue to be relative to the rest of the globe. And until we see something really good happen overseas, I think the dollar is going to continue to reign.
Yeah, it's interesting to see the difference between real yield and inflation expectations in the States moving completely in the opposite direction. Larry, the other thing that really stands out in the foreign exchange markets right now is a complete lack of volatility anywhere. Yes. What is it going to take to bring that to an end?
You know, that's a billion-dollar question, and you hit the nail on the head. I mean, even G7 FX vol, ex-British pound, lowest level in decades. And I think it's going to require something out of the ordinary. It's not something that's already priced into the market, the odds of the Fed doing this, doing that. It's going to be something much bigger than that, something that we're usually not expecting for everything to uncoil. And when it does, just look out.
Look out. So give us a sense of the kind of order of magnitude of what we're going to see here, because as you say, we're in this incredibly tight range at the moment. Volatility is incredibly compressed. When it breaks out, what are we going to see? Because I read analyst reports talking about a really big spike in volatility here.
Yeah, at some point, it always happens. And as we've seen over and over again, the longer volatility compresses, that spring, when it comes out, it's worse than ever. We saw that back in December. It might remain like this for a very long time. The MOVE index that looks at Treasury yields, the lowest it's been, FX vol, all macro vols are low. So I think it's going to have to just be a fundamental shift in thinking with regards to central banks or economic data continuing to worsen overseas, et cetera, not to mention Brexit, French uprisings, et cetera. It could be something out of the blue, but changes the whole shift of thinking with trading and investing.
French uprisings. Larry Shover, thank you very much indeed. Larry Shover joining us from Efficient Advisors. Bonnie.